Welcome to another 21 Hats Dashboard. I'm Lauren Feldman, and today my guest is Ami Kassar, who is founder and CEO of MultiFunding. Ami is an all-around expert on small business finance who has been a guest here before. Welcome back, Ami.
Lauren, always a pleasure to be with you, my friend.
Always my pleasure. Thanks so much for doing this. I know how busy you are. I'm especially eager to talk to you about a project you've been working on that I know you're calling Entretypes. I've been reading about it in your blog at MultiFunding a little bit. I gather it's a methodology you've been developing to help entrepreneurs understand their entrepreneurial personalities. Tell us about it.
Yeah, Lauren. So if you think about it, I think there's a certain connotation or image of what an entrepreneur is, or what the media perceives an entrepreneur to be. But the reality is, in my mind, there's not just one type of entrepreneur. So what we've set out to do is to build a system where we can ask entrepreneurs 9 questions, and then hopefully they will, after they ask those 9 questions, they get one of 8 entretypes. And I'm happy to explain the methodology to you, but it will hopefully give them a little bit of a better sense of who they are and the choices they are making. And if they can identify with that, hopefully it'll let them feel a little bit more comfortable about who they are, and that will give them some peace.
Can you give us a sense of what are the range of types that you've identified?
Sure. So maybe before you get into the types, it's important to talk about what we measure. And I'm happy to, if you want to, even talk about some of the things we chose not to measure.
Yeah, sure.
One of the things we measure is how important control is to somebody. So there are some people that ultimately, could be totally collaborative people, but for them, being an entrepreneur means ultimately they're the boss and nobody can fire them. And they don't want to give that up. And then there are plenty of other entrepreneurs who are happy to build with partners or investors or a board of directors. And ultimately, if push comes to shove, they could be fired or thrown out. And so that one degree of control is definitely one of the things we measure.
What kind of questions do you ask to determine how someone is thinking?
Oh, it could be questions like, how important to you is it that somebody can fire you, cannot fire you? Is that important? So it's all driven around, if forced with a choice, would you slow down growing your business in lieu of selling equity in your business? So it's digging into how important that really ultimately having control is to somebody.
Do you also assess risk tolerance?
Yes. You're setting the stage. That's the next risk tolerance. And this is something you've read in my books and we've talked about over the years. And people are either risk adverse or risk flexible. Interestingly, this can change over time. And it's the one thing that we see people's attitudes about evolve over time. But we definitely assess risk tolerance. And the third thing we assess is time horizon. So we have, as I'm sure you know, Lauren, some entrepreneurs who they see their businesses as very long-term projects. And we call them builders, that they see their business as a 10, 15, 20-year venture, and they're not interested in doing multiple businesses in their lifetime. And then we have other entrepreneurs who are more, we call them flippers. And by flipper, they want to do this many times. They love the startup process. They love this process of starting businesses. It's hard for them to have their hand in just one business. And so these are the 3 ingredients. We measure control. And the control people we either call 51%ers or 49%ers. And then we measure risk tolerance for folks that are either risk flexible or risk averse. And then we measure time horizon to determine if someone's either a builder or a flipper.
So then what are the types that emerge based on that data?
So there are 8 types that emerge. Maybe I'll give you the ones that are the most popular so far.
Sure.
The most popular type is, we call a director. And a director is somebody that wants to be in control of their business. That's important to them. They're happy to take a good amount of personal risk. But they also don't want to do it once. They want to do it multiple times. And that's who we call a director. So it's almost like the vision of, for them, building movies is almost, businesses is almost like having a production studio for developing movies. They don't want to do it once. They want to do it many times in their life. But they want to do it for themselves, not for others.
So that's one.
That's one. Those are the directors. The next scenario we have are what we call the serial entrepreneurs. Serial entrepreneurs share the risk, flexible, and the flipper characteristics with directors, but they're different in that they're happy to do it with investors or other people. They don't need to be in control. They don't ultimately have to have the final say. And that's how we characterize a serial entrepreneur. After the directors and the serial, the next type is the collaborative entrepreneur. The collaborative entrepreneur is risk flexible, but they are seen as a long-term horizon, and they don't have to be in control. An example we think that would be great for a collaborative entrepreneur might be somebody a group of friends who build a marketing agency or a consulting agency, and they're partners, and they do it for a long time, but they're okay that they're doing it together. They're willing to take risks to do it. They see it as a long-term horizon. That's who we call the collaborative entrepreneur. Want me to keep going?
I don't want to do all 8. Are those the 3 most popular?
Those are the 3 most popular, yes.
That's helpful. Tell me this. What are you, Ami?
Aha, I'm not the most common.
I'm not surprised.
I'm the 5th most common. I'm a binocular entrepreneur.
What does that mean?
And a binocular entrepreneur means that I want to ultimately be in control. I'm willing, and I have, as you know, taken a great amount of personal risk for my business, but I see it as a long-term project or initiative. The thought of starting another business sort of makes me vomit. I never want to go through those tortures. First few years again, some people love that process. I don't. I have a vision. I'm building it. I'm determined to do it. I've been willing to take great personal risk to do it. And you sort of have to take me in the parking lot and shoot me before I gave up control.
One of the reasons I was eager to have this conversation is I really enjoyed a particular blog post you wrote in the past few weeks, which I highlighted in the 21 Hats Morning Report, which was you talked about people who speak kind of dismissively of what they call lifestyle entrepreneurs. I hate using that term. People don't necessarily agree on what exactly is a lifestyle entrepreneur, but I think you were getting at the idea that there are certain people who think, there's only one way to do entrepreneurship, and it's to raise money and, build as fast as you can, sell, flip, do it again. And that's not you, right?
Yeah, and that's the genesis, actually, of this project.
Really?
I did a TEDx talk several years ago, and I never developed it, called Entretypes. I did it at Brandeis, where I graduated, and it was kind of the launch of this was an idea, and then I just decided to take it to the next level. The talk was called Entreprofiles, and then I decided that Entretypes was a better word for it than Entreprofiles. But it was based around the idea that in the venture community, there are entrepreneurs or serial entrepreneurs. First time I met a woman who told me she was a serial entrepreneur, I had never heard the term before, and I literally thought she manufactured breakfast cereal until I realized it. And then for a serial entrepreneur or a venture entrepreneur, they refer to everyone else as like these cute little lifestyle businesses, which in my mind, they think of as a perogative term. And I don't like that. So I came up with the idea once when I thought about that. No. We'll call them flippers and we'll call us builders.
I like that.
But in fact, it's more complicated than that, I think. And in this methodology that we've built, we see 8 types. And actually, of the couple hundred people that have taken this survey so far, we see a pretty nice distribution of the different 8 types. It's interesting that as we were building it, one of the things that we initially added to the mix was measuring how important the financial success of the business was to somebody. But then we decided that that was much more situational and not really something we wanted to measure in a personality profile.
And I find all this fascinating, and I can certainly see how this would be of value to you. What's the value to an entrepreneur to find out what type he or she might be?
Well, I think we all, and I know I've done this over at least for the first several years, and Lauren, you were there for me for some of that. We have some imposter syndrome in a way. So I remember in those first few years when I was bootstrapping the business and struggling like hell. And I had friends who were starting fintech or alternative lending businesses and raising multiple rounds of capital or venture capital. Some of them went public, although those companies ultimately, many of them busted. Hiring 100, 200, 300 people, having these beautiful offices in San Francisco and New York. And I would almost feel sometimes like what was wrong with me. I would feel insecure in the choices that I was making. Now, funnily enough, my business is standing strong and some of those aren't, but that's neither here nor there. I think if there is...
Oh, it's here.
Okay. But I think if there's a recognition and an understanding that people choose their own unique entrepreneurial path, and whatever you choose is cool, and be comfortable with it and go forward and be at peace with the choices that you're making. I also think, and this is a lesson for me, I was coaching some entrepreneurs in Omaha a couple weeks ago, and they clearly could benefit from a couple $100,000 of growth capital. And I put my own biases on them. And I said, you're crazy. Don't talk about equity. You can go get $350,000 from the SBA and you can stay in control of your business and you can do A, B, C, D, and E and don't worry about investors. And then the next day they were actually in a group I was working with and we took their risk tolerance tests and found out that their risk tolerance was extremely low. And what I was recommending to them, which was putting my own biases in it, might have caused one or two of them to have a mini heart attack out of the fear and anxiety of it. And that, shame on me for that. So if we can understand each person's kind of entrepreneurial DNA, then we should be advising them and encouraging them to use tools and resources that are going to make them be comfortable.
That's a great anecdote. Really interesting. Do you now ask potential clients to take these survey questions before you try to help them?
We'll get there. So we're going to be presenting these surveys in presentations I'm going to be making at all the EO conferences around the country in the next few weeks. It'll be the first time we did some betas going live, betas online, but we'll be doing them live and in person. And we're not even 100% sure where this is going to sit yet. This is all brand spanking new stuff we're working on. But I do think it will be super important and helpful for us as part of our coaching so we're making sure we're not bringing our own biases to the work that we do. And I think that's the biggest and toughest thing of even mentoring or advising entrepreneurs is to leave your biases at the door and help them make the choices that are good for them, not necessarily what you would make in their situation.
Along with recognizing what you just described about your own biases and how it applied to that group that you were coaching, have there been any other surprises? Anything else you've learned?
Oh, I just think it's pretty interesting that it's been interesting, building up this system and going through the questions and this and that and the other. But it's been fascinating to see that about 95% of the people who've taken this so far, they say, you got me, you're right.
Interesting.
And they're identifying with the result that we're giving them, which is cool. And I wasn't sure we could get there, but I think we're there now. If you take the Myers-Briggs, which is a more complicated survey that we built, that actually leads to 16 different profiles. We've come up with 8. Will we evolve it from here? Maybe, but I think this is a great place to roll it out and see how we go.
Where can someone go if they want to learn more about this, Ami?
So that's a super good question. We hope that this will initially land at multifunding.com/entretypes, but we're not live yet, but we hope to be live in a few days.
Cool. If it doesn't go there, let me know and I'll drop it into the morning report.
100%. So it's pretty interesting. I'm not going to go through the tech nuances that we had to do to figure this out, but we ran into a few bugs in the beta on yesterday, but we're getting there.
Cool. Listen, I got you here. I can't resist. Can I run a few quick questions by you?
Of course.
This is such an interesting period. I just love to hear your perspective on a few things quickly. One, how tough is it to get a bank loan right now?
Lauren, I love to think I'm so smart. I thought this would be the year at MultiFunding we would be slowing down with all the idle money that the government gave businesses that didn't need it, and with all the rising rates, and we literally cannot keep up. So it's just...
Because people are looking for the money. Are they getting it?
Yeah, we're getting people money. People buying businesses, people buying out partners, people growing businesses. It doesn't seem that the rising interest rates environment yet have slowed anything down in our world.
You mentioned the EIDL or EIDL loans. You've written about, you have some concerns about them, that they have negative consequences for business owners who may not realize what it means that they have that on their books. Can you explain that? Yeah,
well, there's a couple of pieces to that. Plenty of people took on, and shame on the government for allowing this up to $2 million of idle debt when their businesses were in perfectly good shape. And it felt like a money grab.
They didn't really need the money, but they thought it would be an opportunity to take it just in case.
It was like this money grab. It was like this fear of missing out. I got to grab some of this before it goes away. And when will I ever see money like this in my lifetime? It's 30-year money at like 3.75% fixed. It was truly too good to be true.
Well, what's wrong with it?
Well, what's wrong with it is that there are the SBA's lien on you and your business. There are a whole bunch of rules and regulations about what you can and can't do with the money. I've met people who use the money to buy $2 million of crypto, put a down payment on a jet. And you can't imagine some of the stories I've heard.
Oof.
But the unintended consequences are becoming, if you got your idle money and the chances are being audited are slim to none. The government just does not have the resources to audit any more than 1/10 of 1% of the people who got the idle money. But what is happening now, if you get to the point for whatever in your business life cycle and you need another loan and you got an idle loan, first question out of the banker's mouth is, what did you do with that money? Where did it go? And if you don't have a really good story for that, you have a character issue. If you can get through that, next thing you've got to do is to get your new loan. You've got to get a subordination agreement with the SBA because the government now has liens on like 4 million businesses. And those subordination agreements are being run through, I think, 12 different offices in the country, all of them with different or doing them differently without clear criteria about when or when they aren't giving the subordinations. So sometimes it can fly through and sometimes you can get stuck for months. I met one guy a week or two ago whose business is growing like gangbusters, and he really needs a proper working capital facility in now for his growth. And he got a $2 million idle that he doesn't want to give back. And I said, you're probably going to have to make a choice, buddy.
Do you have any advice for business owners who see their business softening and are concerned we may be heading into a recession? any standard advice for preparing for that?
Yeah, it's not clear to me that if it is going to be a recession, if it's going to be anything like prior recessions, I still think the system is still bloated with so much cash from the COVID relief. But I always say it's wise to think about your business offensively and defensively at any time and be as best prepared for the unexpected and to take advantage of opportunities that also the change creates. So make sure your lines of credit are in place. Do you have a line of credit at the grade of 10% of your top line sales or 85% of your AR and 50% of your inventory? These are all types of things that are important and you have to consider.
I know you have a thing about alternative lenders, alternative online lenders, and how they mislead people about the rates they charge. I'm curious, are there any alternative lenders who charge a reasonable rate and are worth considering, even if you're not desperate for money?
I think, Lauren, it's a deeper question like that. I think every situation needs to be evaluated on a one-off situation. So as an example, if you are 100% guaranteed if you buy a product, you're going to sell it in a week and you're going to make 40% margin, even if that alternative lender is going to cost you 20% to do that, as expensive and outrageous as that might be, it probably still makes sense to do it. So I really think it's much more situational. But my advice to people is slow down, take a breath, and make sure you're really clear and understand what you're doing.
You often talk about why business owners shouldn't waste their time dealing with big banks, that they need to find a bank that really cares about serving smaller businesses. What's the right way to find that bank?
It really depends on what stage you're at and what it is you're trying to accomplish. But it might be looking at the banks in your neighborhood or your community and seeing who's got maybe assets of $2 billion or less, and they're probably much more likely to care about you than a bigger bank.
But you don't need to go to a bank in your neighborhood anymore, do you?
Well, you don't. That's what it really boils down to, what it is you're trying to accomplish. It's lending, but it's also what kind of banking products you need to service your business. And I think that's a great conversation when we have more time.
I will look forward to that. Ami Kassar is founder and CEO of MultiFunding. Thanks for taking the time, Ami. This was great. I really appreciate it.
Lauren, my pleasure, and always a pleasure to speak with you.
Great. Take care. Thanks, everybody. Have a good week.